Chart of the Week with Redmayne Bentley.
You're listening to financialradio.co.uk. I'm chatting to Bill Rook from Redmayne Bentley. Bill, what would you like to look at this week in terms of your chart picks?
Well, after last week's 20% in a day, we've got another 20% in a day, and it's a winner for the clients all round. It's chloride.
Okay, let's have a look at that. When you mentioned last week's 20% rise, which one was that?
That was Tullow.
Tullow. So well done on Tullow. Are you still holding that one, Bill?
No, we took profits on it because it's shot up so much. We've traded Tullow twice and taken two 20%. So this is quite nice. It's nice to be able to go into share, grab a 20% and move on somewhere else. And we're quite heavily weighted in that sector. And it was looking a bit stretched. Analysts are a bit divided as to whether the share price is going to go any higher or not. And after such a good run on an explosive move, I would like to see it consolidate and then go higher.
Yeah, there's nothing wrong with taking a profit, is there?
Not really, no.
Okay, what about chloride then? Well,
chloride's got a mix of things going on. I don't know if we looked at this template before, but from the bottom, we've got a black line, a black bar at the bottom, which suggests that the share price is trending against the sector in a positive way. It's above the moving average. It's above moving averages, key moving averages, which you can see in the green window above the chart. So when the share is above the black moving average, there's a black bar at the bottom. So this is good. So basically, it suggests the share is trending against the sector. And this is one of the keys of picking winning shares. If you want to hold on to HBOS down 30% or worrying about your Royal Bank of Scotland rights issues down another 30% plus, I mean, sort of, why bother when you can pick shares which are trending against the sector? This is the key to making money. If you want a story and you want to think, well, I can't do it, then hold on to shares that are underperforming against the sector.
How do you find the shares that are trending up against the sector?
Ask me. Or listen to the radio. Listen to this particular channel because I'll show you how. I mean, because you've got the software to pick the shares.
Yep.
And if you look at the window above the chart on this particular share, chloride, you can see that it's moving nicely. It's positive against the sector and trending up. There's two keys to that. It has to be above zero to be positive, and then trending is another thing, which is trending. And when that is trending, it's black at the bottom. So black at the bottom, and I've introduced a volatility ratio in here. So the volatility ratio, you don't generally like to buy shares when they're too volatile. So where the hoop at the end of the chart is, where the green arrow is, that's where there's low volatility. In that hoop is the permission to buy. Now, I don't get too obsessed about buying. I like to buy highs generally, but whether one misses it by a few pennies or not, if everything else is going for it, I think there's too much obsession by getting, I missed the share because it broke out, I didn't see it. But in that hoop there somewhere, you pick the share and it's up 20% today on the bid approach. The earnings behind the share is good. It's based in coming from Europe, where it's strong, a strong currency coming through here, and the mix of the business is good. It's growth, and it's top of the sector, electrical equipment sector. It's 33% outperformance of that sector over a year. It's 30% up against the 350, so it's outperforming against the 350. Another winner.
Fantastic. Are you going to hold on to it after the approach, or are you going to get rid of it?
Well, this is the problem here, because some analysts are looking at between £2.89 and £5 for knockout bid. It's very, very hard to know. It becomes emotional when you get a bid coming in. I generally sell out on any weakness after a bid. It becomes a different way to look at things because it's job done generally. If you get 20% plus on a share in a short period of time, it could be job done. But we wait and see. But all the other indicators, by the way, were going well for it. This is just sort of what you'd expect from these sort of picks. Winning situations, Charles.
Well done, Bill. That's another good pick there. Now, what do you want to move on to next? You've got a few things to look at. You've got potash and what's the other one? DNX?
Dana, another winner in the oil sector.
Well, let's have a look at Dana first, and then we can move on to potash.
Yeah, Dana were about 30% up on Dana, and that hasn't been an easy story. We bought on the breakout on this one, and we paid about 14 odd for it, and it drifted back to about 10. And one client actually phoned up today and said, we missed this one, yes. And I said, well, if you'd actually been in here, you'd have been down about 30% on the share before it does move up 30%. So it's not an easy ride. But because we're holding quality here, this particular share is ungeared against the future oil price movements. So, unhedged against future oil price movements. So if the oil price goes up, this is going to make more for this company. It's made another oil find today, and it's spun up another pound today. So this is really looking quite good. Another look, black at the bottom there, suggesting it's trending up and against the sector. So it is very, very positive, this company, and moving up on low volatility. So I'm very encouraged by that. So another winner from the oil sector, where we're doing very well there.
It's been a very strong sector, hasn't it? What
Yep.
about the other pick you want to have a look at? It's potash. Now, we've got two charts for potash. Which one would you like to look at first?
Well, first one, I want to look at let's have a look, the POTT chart.
Okay.
This is where we had the vertical line last time, was on the 13th of October 2006. We were looking for how to pick a six-bagger, and I could only pick on that particular day 41 shares from the New York Stock Exchange that were looking at that point. They're looking likely to go higher. Now, what I did then was to let time roll on a bit. Now, you haven't got a six-bagger in sight now, but you've got a 3 and a bit bagger if you get in at around this level here, where I did the next scan at the 9th of May 2007, about a year ago. Now, actually, what I had come up from when I did that scan, a lot of people say, all very well picking up that one share. What else came up? And I came up with 1, 2, 3, 4, 5, 6, 7, 8, 9 other shares at that particular time. So the scan has been narrowed down to 9. These are shares which are outperforming the sectors, looking very strong against the markets, and with good volume. So these are very, very special shares and breaking high ground. So they're outperforming already on all fronts, and we're looking to take this step further. How far did this go in a year's time? So of those shares, I worked out that they're up about 89%. If you'd taken that batch, you'd have had potash up 320, another company called GGB up 200%, YZC up 170, and RTP up 80%, and our own Rio up 81%. There's a 20%, a 30% loss, and 2 other flat shares and the change. So I think over a period of a year, and now, of course, what I haven't done here is work out what the drawdown period, what any one point the drawdown would have been during the course of the year. So you might have been down 50 or 60% perhaps on one of them, and then it bounces back to now. But over a year, I don't think that's a bad return.
I don't think it's a bad return at all, Bill.
No.
So that's POTT. Now, what does the second chart tell you?
Well, the whole chart is a whole picture. Now, the whole picture here. Now, you look. The key here is look at the blue bar at the bottom there.
Yep.
The blue bar at the bottom. So that's just before the sector, just on the scan there. That's when the share starts going positive against the sector.
And it doesn't take that long, does it? I mean, it's a year to return that money.
And that's about 320%, Giles. And it did drop. It did drop in February, March, January, February time. There was a huge drop. But again, I suppose if you factor in getting out. Now, the next phase here is to suggest, okay, I'm in these 9 odd shares here. Well, how am I going to hold on to them? And this is the big problem. How do you hold on to them? Because you could be holding on to them and taking a cheeky profit sort of after a few days, after a few weeks, and missing out on the rest of the run. So holding.
How do you make that decision then? I mean, can you have a target for a stock like this, or is it?
If you have a target, then you're going to limit yourself on all round, aren't you? That's the problem. I suppose this is one of the hurdles here, is to say, well, how do I get into the position of picking up a 320, a 200% rise, 170, an 81% rise, or an 80% rise? I mean, all those things in a year. How do you get around that? And actually, I don't know much about the companies here at all, apart from the fact they're outperforming the market, the sector, and the volume levels are very good, and they're breaking new high ground.
Because you couldn't use a stop loss, really, could you? Because you'd have been stopped out, unless it was a very wide stop loss. You'd have been stopped out.
Well, this is right. I mean, one of the stop losses one of the Thursday group traders uses is a 200-day turning down. So he would still be in potash, because the 200-day, which is the dark line under the last chart, has been rising all the time. Yeah. One of the stop losses I use is when the share goes to the red line, which is the top, which is 65% above the 200-day, which I regard as being highly inflated line. The highly inflated line, that shares unlikely to go a lot higher unless they're very special situations. Now, there are situations when the smaller companies have shot up far, far higher than that line, and this is one of the perils of using that system, is getting out on profit lock systems, is that you don't let the profits run. So if you can try and let them run, but it is difficult when you get down to that sort of level, that big jerky level in January, February time this year. I mean, it's sort of very, very tricky down there. I suppose if you're going to come out, then you have to say, well, I'll come out of this particular share. I'm going to go back in again. So I suppose it's consistency, and that's one of the things we may look at over the course of the following weeks, Giles, I think.
Bill, great to talk to you. Thank you very much. Fantastic pick on potash there.
Yeah,
And
thanks, Charles.
well done on your 20% up today on chloride and, of course, tallow oil. We will watch your selections very closely, and we'll chat to you again next week. Bill Brook from Redmayne Bentley, good to talk to you.
Thanks, Charles.
Chart of the Week with Redmayne Bentley.